Are you worried about owing a huge amount to the IRS if you sell your home? Wondering what records you'll need to have ready for tax preparation? We're going to answer those questions today on the Ask Ralph Show. Hello, everyone, and welcome back to another episode of Ask Ralph, the podcast where we answer all of your burning questions about personal finance and taxation. I'm your host, Ralph Estep Jr., and today we have a very important topic to discuss: reporting the sale of your primary residence. Joining us as our sponsor for this episode is Saggio Accounting Plus, providing comprehensive accounting services to individuals and businesses. Reporting the sale of your primary residence may seem like a daunting task, but fear not. We're here to break it down for you and provide you with all the information you need, so let's dive right in.
Welcome to the Ask Ralph podcast, where listening to an experienced financial professional can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting, as Ralph makes the complex simple by sharing his real-world knowledge with all things financial. Now here's your host, Ralph Estep Jr.
First and foremost, when you sell your primary residence, you need to gather some important documents. These documents will help you accurately report the sale and ensure compliance with tax regulations. Some of the essential documents include, number one, a closing statement. This document, also known as the settlement sheet or settlement statement, provides a detailed breakdown of the financial transactions involved in the sale. It includes information about the purchase price, closing cost, and any adjustments made between the buyer and seller. Number two, purchase and sales agreement. This is the contract between the buyer and seller, outlining the terms and conditions of the sale. It includes details such as the sales price, closing date, and any contingencies. Number three, home improvement records. If you made any improvements to your home that may affect the cost basis, it's important to keep the records of these expenses. This includes your receipts for renovations, additions, or any other significant upgrades. Number four, property tax records. You'll need documentation of property tax payments made during the time you own the home. This will help determine the taxable gain or loss on the sale. Number five, mortgage and loan information. Gather all documents related to your mortgage or any loan secured by the property. This includes the original loan agreement, statements showing payments made, and any outstanding balances. Once you have these documents in hand, it's time to consider the potential tax consequences and considerations of selling your primary residence. Let's explore some key points. The first thing I want to talk about is capital gains tax. In most cases, when you sell your primary residence, you may be eligible for a capital gains tax exclusion. As of 2023, if you're single, you can exclude up to $250,000 of gain from the sale of your home. If you're married and filing jointly, the exclusion increases to $500,000. However, certain criteria must be met, such as owning and using home as your primary residence for at least the last 2 out of 5 years. Now, there also is a partial exclusion. If you don't meet the ownership and use requirements for the full exclusion, you may still be eligible for a partial exclusion based on specific circumstances, such as change in employment, health issues, or unforeseen circumstances. Let's talk about reporting the sale. To report the sale of your primary residence, you will need IRS Form 1099-S, which is used to report the proceeds from the real estate transactions. Additionally, you may need to file IRS Form 8949 if you have a capital gain or loss to report. This 1099-S form is something you will generally receive from the person who handled the closing, whether that be the attorney in the state of Delaware. In other states, it may be a closing agent. Let's talk about net investment income, or NIIT. It's important to note that if your modified adjusted gross income exceeds certain thresholds, you may be subject to NIIT. This additional tax of 3.8% applies to certain investment income, including capital gains. We also need to talk about state and local taxes. Keep in mind that state and local taxes may also impact the tax consequence of selling your primary residence. It is essential to consult with a tax professional familiar with your specific jurisdiction to ensure compliance. Remember, these are just some general considerations, and every situation is unique. It's always a good idea to consult with a qualified tax professional to understand the full implications and requirements based on your individual circumstances. I mention this to my clients quite frequently, that this is generally a time when people will come in to see somebody like myself, because this has gotten a little bit bigger than a breadbasket, as they say. And this is not the time to try to forge this path on your own. This is a complicated situation, and you may end up putting yourself into some IRS jeopardy if it's not handled correctly. Thank you for listening to this episode of Ask Ralph, where we discussed how to report the sale of your primary residence. We covered the essential documents needed, such as the closing statement, purchase and sales agreement, home improvement records, property tax records, and mortgage and loan information. We also delved into the potential tax consequences considerations, including capital gains tax, partial exclusion, reporting the sale with IRS forms, net investment income tax, and state and local taxes. Remember, reporting the sale of your primary residence can be complex, and it's always a good idea to consult with a tax professional who can provide personalized advice based on your specific situation. Stay tuned for more episodes of Ask Ralph, where we aim to bring you valuable insights and answers to your burning questions about personal finance and taxation. This episode was brought to you by Saggio Accounting Plus, your trusted partner for comprehensive accounting services. Whether you're an individual or business, Saggio Accounting Plus has the expertise to meet your accounting needs. Visit their website or contact them at www.askralph.com. Thank you again for tuning in. If you have questions or topics you'd like us to cover in future episodes, please reach out to our website at askralphpodcast.com, where you can leave a review or even a voicemail message.
Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.